Hello traders, welcome to session 122. In today's session you're going to watch me trade a number of trades on the NQ. So I'll explain those trades in detail as I was taking those. Now I want to give you a bit of background also on what my targets were, where my stops were, and the reasoning behind my targets, etc. So as I say in my videos, how to day trade any market, it really doesn't matter whether you trade forex, futures or stocks, use exactly the same setups. I also a very big one on POQ, power quitting, get in, get out, get paid. I hit my target, then I like to finish for the day. So you'll see me hit a certain target, then I'll wrap things up. Now as always, there is a risk in trading. Don't trade with money that you can't afford to lose. You know the general drill. And the great thing about most modern trading platforms now, they actually allow you to trade on the simulator until you're ready to actually go live. Now very quick advertisement: if you haven't already downloaded my ebook The Truth About Day Trading, please click on the link below. Make sure you subscribe to my YouTube channel so you can be kept up to date with all of my latest videos, and even better still, why not become a member of the Day Traders Fast Track program? As I said, I'll be very quick with this. For $197 you get there are dozens of training videos, there are 35 PowerPoints, all of my indicators. There's really nothing else like it. It's so comprehensive. In fact, I do want to show you, if I can see it down here. Well, I'm just launching actually today the new members area. So all of the indicators that I use, whether you're with TradingView, Thinkorswim, and even if you've got a trading platform that I don't have indicators for, I give you all of the settings. As you can set up what you see on my charts on just about any trading platform, you can customize standard indicator settings. Now very important, and that I bring this up, is you'll see me trade a number of different trading methodologies. That is, I love reversal trading, trend continuation, but when you first start trading, I've got 4 specific trades that I recommend you focus on, and they're all interrelated, meaning you'll have, I call it the rule of 1 will set up before you have a 2B set up, and they work hand in hand. They're easy to learn, and if you're a brand new trader, that's where you start from. But there are literally dozens of training videos, PowerPoints, etc., all included. Plus I have a bonus, I'm nearly finished, where you can also attend 8 of my live 2-hour coaching sessions. Now if you can't attend those, they are recorded, and I run them every Tuesday and Wednesday evening, 6 to 8 p.m. Eastern Standard Time, and you can join using the link below. Okay, let's now get into the trading side of it. So in firing these trades off, so it was at 1:52 a.m. Now I just want to say this about the time frame that I trade. This is trading using a 4-tick Renko. It's impossible to trade the 4-tick Renko during the New York hours. You're going to jump up to an 8 or even as high as a 16-tick, and the reason this is important, it comes down to money management. Now if you're going to trade, like for an example here today, you're going to see me trade the 4-tick, that is the recorded trades I've recorded. I allow personally $8,000 per contract. Why? I work at a 1% risk per trade maximum. Now you get all of these spreadsheets, by the way. Now down here you'll see the 4-tick is a 14-tick stop loss, which is $70, allow 3,500. I actually, and I teach you why in my sessions, we allow 2 to 4 ticks more than that. Okay, so you'll hear me and you'll see it when we get back to the PowerPoint. I allow $4,000. If you're a new member, I recommend you allow $4,000, which is a maximum of a 2% risk. Okay, as you build your account, you never risk more than 1%. Now, do you know what? In sales videos, they don't want you to see this. They want to make it sound really easy. You don't need a lot of money. Now, the truth is you don't need a lot of money to start trading, because you can start on the micros. But the fact is, money management is one of the absolute key considerations when it comes to mastering the art of day trading. So I wanted to bring that up. So I recommend you allow at least $4,000 per contract, but you start on the micro. Now, I know what you might say, well, look, the intraday margins are a lot less depending on your broker, between $500 and $1,000. But what that doesn't take into account is a stop loss. We never risk more than 2%. I wanted to bring this up because if you become a member and you're attending my live sessions, this is where you hear of traders blowing their accounts all the time because they just don't understand money management. So here in this particular case, and I'll show you the live video in a moment, but I want to explain a few more things which are critical. I had two trend continuation trades, a reversal and a reversal confirmation, and then a trend continuation trade again. Now, I'll use quite often a buy or a sell stop limit order. And for an example, just here on this first trade where I was trading 10 contracts, I was only filled on one. It ran away and I was scalping. Now, when I say I was scalping, I mentioned that my philosophy is get in, get out, get paid. I was after, I think it was 12 ticks in this particular case. So I get my 12 ticks, I'm out of a trade. Now, on the other hand, my stop loss is 16 ticks. Well, you may say, well, look, gee, that doesn't work. Well, actually it does when you're scalping, but you'll see when I have other trades, certain other trades like this one, which I'll explain live, I was going for a much larger target, so it balances out in the end. But likewise, if we're buying or selling into a pivot, sometimes I'll just scalp maybe only 4 or 5 ticks, but I'll explain that when we do the live tick. Now, also my target at a 1% risk is $200 per day. If you're risking 2%, 200, as you're about to see, is very achievable. Now, I'll also show you, because you might look at this and say, oh, is this just a cherry-picked area? But as you'll see on the charts, traders, there's some great trading beforehand, there was great trading afterwards, but the secret is to wait for a trend. Now, what I do want to cover with you here, traders, is this concept here of beginning with the end in mind. I'm very much about traders should be setting targets and goals for themselves, and Stephen Covey says that to begin with the end in mind means to start with a clear understanding really of what you want to achieve as a day trader. Now, by having goals, and I'm not talking about $1,000 per day per contract, by having sensible goals, when you've got a big enough why, you can find the how. Now, you'll notice in nearly all of my videos I promote the POQ concept, that is the power of quitting. Now, on the 4 tick, if I'm trading, say, the 4 tick RTY, I'm after $200 a day. If per contract, if I'm after trading the 2 tick ES, right, I'm after $200 a day per contract. And what I base that on is the amount of capital I need to allocate. So I won't get into that now, it's beyond this video. But to achieve your goal, if you're going to be scalping, you need to be scalping between 4 and 5 trades a day on average. Now, this is assuming you're all winners in a run, which of course, generally, even I'm going to have losses as well. So it just depends on what your targets are. But here is the question I suppose I'm trying to get across. Is $200 a day realistic? Absolutely, as you're about to see. Now, what if you don't have, because here I'm telling you, you need to have $4,000. What if you don't have $4,000 to start with? You start on the micro, or even if you do, but you're a brand new trader, you start on the simulator Then you start with a micro account, so instead of being $5 a tick, it's only 50 cents. And instead of going for 200 a day, where a micro contract is 10% of the value, you're going for only $20 a day. Now what that means is within 12 weeks, traders, you can now roll over, take your funds out. Okay, week 12 you've got 4,000, hypothetically I've got to say 4,600 in your account. You can now roll over and start trading a big contract. Now very important is how realistic are these compound tables. Well, the way these tables work, you only start trading a second contract when you double your money each time. So to go from one contract to trading two, you've got to have another $400 in your account. Now don't be conned by these incredible compound tables I see on the internet, on YouTube videos, etc. Build your account with the market's money. What you may do, if you do have the funds, after 5-10 weeks, you might really build up the confidence and the competence to actually put more of your capital in and start trading with a greater amount of your capital. But don't rush the process. Now what this means is we can then roll over, we switch to the 4 tick, and you can see over here the contract value 4,200 a day. Within 12 weeks we've now got the potential of earning around our $10,000 a week. So this is the true potential of day trading. Now what's important is how long would this take us. If you start with the micro, once again you might accelerate that, but starting with the micro, within 12 weeks you roll over, so potentially within 24 weeks you've got a potential income of 10,000 per week. One thing I do want to throw in here though is the time on the simulator. You're going to spend 6 to 8 weeks on the simulator, I would recommend, before you roll over. Now if you're already an experienced contract, of course, an experienced trader, let me get this right, you could roll over within weeks and be trading the setups. You may find straight away they resonate with you. You understand exactly what I'm doing and how I do it. So let's go to the charts. In this case we're going to go to the live recording, but before we do that I just want to also mention here that there are some critical things that we do need to consider, and fortunately these are very easy to learn, and virtually every trading platform will have these plot automatically on your charts. So where are our pivot levels and CAN pivot levels? The Friday's open high and low, our 89 and 200 EMAs, our intraday swings, and our current high and low. And the reason these are critical, these act as major support resistance levels, and they are also what we call price magnets. So let me now pull up this recording and I'll explain these trades live as I was taking them. Okay, so this video that we're about to watch here goes for, have I started that? No, let me start it. Goes for 10 minutes. So let me just we'll run this and I'll explain over the 10 minutes exactly what I'm doing. Now first of all I want you to notice the trend. Okay, and just there I'd entered a trade, so that was fairly quick, but unfortunately I was only filled on one contract. Now if I use say a market order, I would have been filled, but I would have had what I call slippage. So at times I'll use a stop limit order, and the downside of that is at times I don't get all of my contracts filled. Now what I'm doing here is, you may notice, and you'll see me do this generally regularly, here by the way, before we get to that, I was looking what's in front of the trade, and I've just gone long again. Now my target here is only 12 ticks, so I'm after a quick scalp. Now what you can't see here, traders, is my anchor chart. So I have a higher time frame I'm also referring to. Now here in this case I've got a 16 tick stop loss, and I'm after 12 ticks. Don't turn your nose up at that, traders, because it kicks butt when you're trading certain setups. It's a quick scalp. Now what you, and I didn't do it here, what you'll quite often see me do is, and hopefully you can see this maybe on the screen, I'm not sure if you can see the circle. I'll usually, and I didn't do it here, I'll usually bring my stop loss up and tuck it just below a prior swing. But what you don't want to do is make your stop loss too tight. Okay, you want to give it, especially with the NASDAQ. The NASDAQ traders has got a nickname, the Nasty Nas. Okay, and it's got another one, the Nifty Nas. So it can be two things. Now here we've got a great trend running, and that's really one of the key secrets of day trading, successful day trading, is to make sure that you're trading with the trend, especially if you're a new trader. And we can see here we've got a great trend at the moment. Now what I've, and probably at times I'll pause the video, I won't pause it here by the way, but there might be some pauses because this is all over and done with in less than 15 minutes. So what I'm looking at, I think this is where I was then looking at on the higher time frame, looking for divergence. And the reason being, I had a very strong uptrend. I had some great divergence setting up on the higher time frame. So I'm just probably, this is a spot I think where I'm just waiting for that to set up. Now you can see here, you'll hear me say follow the cloud. Now see the arrows, that's my turning point indicator, and then the white paint bar you see there, that's my super scalper. So the turning point indicator is something that from a little used indicator that kicks butt, and it does a similar thing to the super scalper. There's some other uses for it as well. That's where the arrows plot. Now I've only got that coded for NinjaTrader, by the way, but you can set it up on basically any trading platform. Okay, now this is where I would be, I think I was looking for divergence to set up. Now you've got, now here it is here. Now you'll see me place orders in advance of the market, and the way I can do that, I'm looking at a particular level to be hit on my higher time frame. So I'm looking at my higher time frame, and that is telling me, based upon a strategy that I have, where to place my entry or where to place my order. Now here in this particular case, you can see my stop loss is not one tick, it's right at that swing point. Once again, I'm not sure if you can see the little circle there, but I usually will move my stop so it's one tick above. Now remember, before I said we want to keep a close track on where our 89 EMA is. Now see that there, they become price magnets, and this is where sometimes, look, and I was pushing my luck here. See where my target is? It's under the 89 EMA. So I actually should have covered down there and exited the trade. And you can see there it's a lot greater than just going for 12 ticks in that particular move. You'll sometimes see me go to adjust my stop or my target, and I'll think I'll put it back, and you'll see me quite often do that, actively managing. Now I know some traders like to have a fixed target and whatever. It, you know, just everyone's got a slightly different style. So just here, I think I was about to get a T10 set up. A T10 on a higher time frame. It's a very high probability reversal confirmation that I'll look for on a higher time frame. And we also have it set up here on the entry chart. So here I've put in another order here to short the market. So I've now got two orders. I was already in the green. Now if you're risking 2% per trade, I recommend that you don't add to a position, and unless you're well and truly in the money, that is, the last thing you want to do is have two trades come back and give you a full stop out for 2% each. You're down 4%. You do not want that. So either you trade at less than 2%, or you make sure you're already well and truly in profit when you add to an existing position. So here we just patiently waiting. This is a really nice reversal. Now see down below, you've got yesterday's high, and see those black lines that are horizontal, little dots there. They are the swing lows, and you can see the blue lines there. They are pivots. Okay, so pivots make great price magnets, and I call it the pivot magnet trade. We can trade into pivots. Is a specific technique that we use for that very high probability for both with trend and counter trend. And then you have, when you do sell into a pivot, we'll quite often then have, okay, so I'm filled on my first slot and now just waiting for our second lot. So with pivot magnet and pivot bounce trades, once you learn how to trade them, they're fantastic. Now what I should have, maybe I did consider it. Oh, there we go. Here we go. I was about to say I should have really targeted the pivot down below, and I'm pleased to see I move that down. If the market stalls, I'll actually lift it back up. Say if a market starts to go sideways again or whatever, once again, here it is here. Now we also want to make sure we front run. Now front run traders is where we have our exit 1 or 2 ticks above the pivot, and here I'm only 1 tick above, because as professional, and there we go, we bounced out, and see how we didn't even hit. Now yesterday's high and low, etc., I classify them as pivots, and see how we missed it by a tick. So that's something that quite often happens. Now here I've now got an order in to sell again. Now this is a trend following strategy. See how we've now got the orange cloud. Now see that speed, that actually happened that quickly, and this with the Nifty as it can happen. Fortunately it doesn't happen all the time. Now if you had been against that trade, trading against it, you just would have had a heap of slippage, probably 2 or 3 ticks slippage, because the NQ, by the way, you've got this, I mentioned the micro contract, you've got nearly double the amount of volume traded. Now just here I'm just pointing out some other potential. I'd pause the video to do the typing there, just pointing out some other potential setups. Now just whilst I'm here, what do we do just here? If you're a new trader, you're following the gold. See my gold line there? You're only going to trade in the direction of that. For members watching, yes, you did have a little bit to farm, but here you want to be following the gold. So follow the shadow of the orange and it turns blue, so we want to be trading long just there. Okay, and then you had another perfect entry just there. So what you're doing, you're following either the turning point indicator or the super scalper. Now the reversals here can be fantastic. So the T10, sorry, the 2D, sorry, that is a specific reversal strategy, and your T10 is a reversal confirmation, okay, that we trade. Now let me pause it. What have we got here? Another 5 minutes, and let's just see. I've just rebooted NinjaTrader, so I want to go back and just show you a couple of things. So before I started recording, before I started live trading this session, just over here I was doing some one-on-one training one of my clients here, and we're just talking about why we don't want to trade these flat areas. But what I want to point out is you really want to learn how to identify market reversals, and we do that by using both your entry and your anchor chart. And the reason being, if you want to go for larger targets, if you can get in at the start of a trend, of course that's where you can then pick up your runners. Now each one of these here leading were just mechanical rules-based entries. Now the only reason that you're not going to get these trades or learn these ones or be able to trade these is if you're using the wrong time frame. And that's where traders will come up, oh, you can't use the 4 tick during New York. Well, of course you can't, it's too fast. And that's one thing you got to watch with the NQ. Sometimes it is far too fast of a 4 tick, and you've got to increase the time frame, which means then you've got to have a larger account. Well, if you don't have a larger account to support the major contract, say the NQ, you trade the micros. Okay, now let me just make sure that this is ready, and I'll just show you very quickly over 2 minutes some other markets. Okay, so what I've got here, and I'll just be very quick with this because I know new and aspiring and even experienced traders are always interested. So the market's just opened again, so at 1700 Central Standard Time, the market opens in what we call the Globex session, which is what I was trading earlier. So there's some fantastic trading during that time. Now it's been now open 46 minutes, and this is on the 2 tick, so it usually slows down. So each one of these steps here in this case is worth $5. Now if you're going to trade the Russell like we've got just here with the 5 tick, with the 2 tick, you need around $2,500 to trade that. Now notice how quick that is right now. So what we can actually do is we can jump up the time frame. Now typically, and this is where the Russell can be fantastic, you're only going to be trading for 2, 3, or 4 tick. So the Russell is nearly always tradable using those time frames. I love CL, I love the Texas T. You've got YM, even gold here can be a fantastic market to trade. So all of the concepts I teach, you can use all of on really any sort of market. Now another really good market to consider trading after hours is the 6J, is the CME contract of the yen that's put out. Now that's at $6.25 per tick, and you get fantastic volume after hours. Now the reason I'm mentioning this is that for many of you watching this, you still may be holding down a job, and so day trading doesn't have to only be during the New York hours. There's also some fantastic trading opportunities after hours on these markets. Now remember over here I mentioned about the RTY, and as I said, it's moving quite quickly. I want to show you this because a lot of people do really, once again, it just sold on the wrong approach. Let me pull up, I'll just pause this again. So what I wanted to show you traders is that I mentioned that if you're going to trade, say the Dow, the Russell after hours, you only need $2,500 in your account. A sensible target, let's talk about sensible targets, is 25 ticks a day net after commissions and after any losses. Okay, that's basically 4 to 5 quick scalps. And look at the potential you've got there within here 12 weeks, 5,000 plus a week income. Now I do have to say this on the Russell, on the Dow, even the NASDAQ, is trading any more than 10 sort of contracts, you get a lot more slippage. So I'm saying this for the benefit of the really experienced traders here. That's where, if you like the Russell, which trends beautifully, and that's what we're looking for in a market. Markets that trend, you can start trading the Russell with during the New York hours. For Russell, the Dow, once again the NASDAQ during New York, you can't trade with 4,000 account, but then 200 a day is, as you'll see in many of my videos, I love the Russell in the afternoon session. Here, look where you are there in 12 weeks trading 10 contracts at 10,000 a week income. That's a true potential. And so you want to start off by trading with the trend, follow the money management rules. But traders, this is not rocket science. What it really means is it's simply about following the trading rules. So why don't you come and join me in my classes. Once again, when you see the massive amount of information I have, experienced traders love it, by the way. Some of the newbies say, oh, there's too much for me to learn. No, there's not. You focus, and I teach you in the videos. There are 4 setups that you focus on, and they're all interrelated. So when I say 4, there's really one core setup, but it can set up slightly differently. You start from there, and I've got over 15, whether it be a T20, a T10, there's a range of different strategies, but once again, it's a whole lot more. For an example, just on here, and I know that we're over getting past the time frame now, traders, is that I spend a lot of time on the psychology of trading. And if we were to go into the members area now, you'll see I've got a ton of stuff there from a whole range of those in trading psychology. I've even hired a hypnotherapist who's recorded 4 different soundtracks for my members on the psychology of trading, so you can lay down and go through the hypnotherapy sessions. And the reason being, I know that trading is 90% psychology, 5% money management, and only 5% the trading strategies themselves. So probably enough said, traders. I'll see you on the next video. Even better still, see you in one of my training sessions. Thank you.